All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and let's just look at the S&P chart here just for a few seconds. The majority of, I would say, today's price action, we kind of got a little bit of a hammer down here on the open. This is what we've been seeing. I would say not every day, but certainly, when we start the day, when futures, S&P futures are up a little bit, and the rest of the world is basically down. We came in today, and I think Europe. I didn't even see where Europe closed, but the DAX was down 1.1% and the Euro stocks were down 80 basis points. It kind of just looked like it was going to be a fishy day today. When you see that the S&P futures are coming into the open and they're up about 20 or 30 basis points, and the rest of the world is kind of including Europe. Sometimes this is what you get, right? I mean, it is what it is. There's so much attention right now to the tax plan and so forth, but really that's not I think anyway, I have my own opinion on this stuff. We've been, the rest of the world has been going along on its own without tax plan stuff. So is it impactful to certain groups? And certainly we've seen a reshuffling or a rotation. Yeah, sure, but we're really driven by other things. So it kind of made sense to me that it's a little bit of digestion at this point. Again, you can kind of see this is where we opened up. I think this was Wednesday as well. So similar move, a little bit of profit taking. So 2 days of kind of moving in a little bit. All in all, is it something to worry about? No. We just got really really overbought. Could we spend another day down here? Sure. We've just really gotten ahead of ourselves, I think. So, how we've been kind of trading in the trading room is maybe doing a little bit more day trading, a little bit more scalping. Today, I actually just did not really trade that much today. I didn't like the price action today, and it's just paying closer attention to some smaller areas of the market. In particular, so I'm going to go over that in just a second. But one thing to notice here is that we're not overbought. Majorly overbought anymore. We were about an eight, almost I think around an 80 in the S&P. So we're back down to a 68 RSI. So just like we were over here when we got really overbought, using the RSI relative strength indicator. So this was 76. We got to about a 75 this time around. So again, running really really hot. The Nasdaq was a little bit weak again. Right on that open, some sellers coming in here right on that open and kind of bringing us down. Not much of a really lift, too much of a lift after that. So same thing with small caps. Small caps started to go. It just doesn't. It looks like we're kind of a little bit out of momentum here. So again, just in these types of situations, I think we've done a really good job in the trading room. Really trimming some of those positions. And initiating smaller ones the last couple of days, and just not getting caught in a really overbought market. Again, you really don't want to be buying a ton of positions up here, right? You want to be. You go back to the Nasdaq for a minute. When we got this pullback into support, that's where you want to be buying, and really adding positions. So we did that really well. And at this point, for me, it's been a lot of unwinding of positions. A couple small positions that I started, and I'll get to some of the movers. But the metals and mining, we've been all over this group. I actually detailed this yesterday morning, talking about the metals and mining group, showing some really nice strength. Again, this is the XME ETF. It's an equally weighted ETF. If you want to see the components, it's basically a combination of steel names. So you've got your aluminum names in here too. You got your Alcoa, which has been reacting really well. You got Cliffs, AKS, and then you also have so you got Steel Dynamics, U.S. Steel in here. Then you also have some gold miners, which acted really well today. The GDXJ Junior Gold Miners was up about 2% on the day. What was GDX? GDX was a little bit less than that, up 1.7% on the day. So this was one of your better groups, and we actually played a trade today in XME to the long side. The price action was great yesterday, and we just continue to see call buyers. And it's rare when you see call buyers in sector ETFs, but XME, that's a couple days now where we've seen, this time it was the January 34 calls. So that got me into a trade this morning, and it worked out pretty nicely. Besides that, I'd say energy looks really compelling here. I think this is kind of try to get going a couple times just when people think it's going to really start to edge out. It's stalled, and it's been a little bit frustrating. But real nice bar. I think a lot of people noticing things like PXD today. Real healthy candle above the 200-day moving average. That's that white line. Interesting here. It got up to the 200, failed. It got up to the 200 again. A little bit of consolidation here, and then bang. So real nice move in this one. I'm long Oxy, which also had a beautiful day. I've said for a while that I think Oxy's is one of the nicer charts. So up another 1.3%. I'm also long some OIH. OIH still kind of stuck below the 200-day moving average. I kind of like XLE maybe a little bit better here, but it is in value. I'm looking for this thing to get to 25.55 by the end of the week, since we are now in value for the week. Notice this was a great place to sell. What was this, last week, I think? But yeah, that's where the momentum was today. The oil numbers, that was the catalyst. Kind of weird today. Again, around the oil numbers, they just haven't been behaving how they usually have. If you look at the statistics that came out, you kind of look at the overall numbers, and I'm not an oil expert, but still, when you see something like this, when you see the a big drawdown in inventory, 6.4, and then in gasoline, which has been showing in a build, not a drawdown, but a build less than expected. So it was kind of like, hey, why are we selling off? That didn't make a lot of sense. So sometimes there's a little whipsaw move after the Department of Energy numbers, and then it gets going. This was 10:30. What else? We continue to get, speaking of economics, we continue to get positive economics from housing. Not so much mortgage applications. It's funny. I'm not going to say any names, but there's a woman on CNBC who comes out, and every time there's like a slightly bad number, she's like, "It's horrible. It's so bad." And granted, this is a weekly number, so it's a lot of variation between week to week. But then when there's something good, like it's very low. But so anyway, the housing numbers, like there's been a lot of good stuff. Look at the existing home sales, 5.8 versus 5.3, and it's been like that every besides again this weekly mortgage application number. But there's been a definite uptick in the housing numbers. So that was the one trade that I took the other day. Like I said, I'm not haven't been putting on big risk here, but Masco had a nice call buyer the other day, and able to take my first target in that one. That was in here that we saw the call buying. So nice move up in that name, and some nice profits in that one. So really, that's where the momentum is. You go back to XME, also the steel names moving up nicely here. Bounce 200-day moving average, retake it, and it's we're back to this. I guess this is almost a triple top. We'll see if this can actually break out here a little bit in the SL. So this is again a steel ETF. People forget about this ETF, but there is a steel ETF out there, and helped by a few upgrades in this morning. In terms of option activity, there was a couple things that were interesting. The Goldman. Also, let me just talk about bonds for a minute. I mentioned these yesterday, but if you look at the long bonds, really interesting. That's a break of the 200-day moving average. So, if you've been looking to kind of short bonds or short TLT, TLT is going to look a little bit different whether or not you look at it dividend adjusted or not dividend adjusted. This chart is non-dividend adjusted, so it's also breaking the 200-day moving average. Listen, as long as you're using a line, it doesn't really matter to me whether or not you use dividend adjusted charts or non-dividend, as long as you're giving yourself a point of reference to go long or to go short. Doesn't really matter. You could see dividend adjusted TLT still above the 200. But again, you look at the long bond slash ZB, and really interesting to see a break of the 200-day moving average. So you have to think about, again, there's a lot of things that are sensitive to bonds and to yields. So why is this important? Because there's a couple of things that are negatively impacted by bonds when interest rates start to go up. So again, remember, of course, with bonds, as the price goes down, yields go up, right? It's an inverse relationship. So when you look at, I'll just show it to you in terms of yield. And we'll look at maybe the 30-year here, which is up to 287, and we'll look at a yield graph. And yeah, you could see them shooting up to 2.87 here in the yield. So what that means when yields go up is people start taking money out of their equity yield plays. So things like utilities, REITs, uh, any of those higher yielding equity plays, people start to move out of those and into bonds, because bonds, is, let's face it, are a safer investment. So you might start to see that tug of war happen. And then what usually does pretty well when yields go up, that's banks. Banks really didn't perform. It's kind of a question mark to me. I actually put on a trade in Goldman Sachs today, and it just completely fell on its face. So sometimes these trades, they don't work out right on the first day. So you have to have a little bit more patience. But XLF, sitting as well on the 52-week high, but I would think this rising rate environment will be good for them. Let's see what happens here in the next couple days. Again, one day doesn't make a huge impact. So we did see Goldman. We saw just a couple names like this that I didn't take. I'm just not that familiar with it. LAMR, also PWR had a nice call buyer. I think that this chart looks pretty good, but again, it's a lot of January stuff. So you either have to restructure something differently, but just a ton of January, which is not what I really want right now. There's a bit of Skyworks calls that went up. They were initiated, I think, at Piper at an outperform. So nice move there. This one I think is interesting. This Trox. This is another material name. I think they're involved in titanium. This is a 1/2 call spread. So if you kind of take a look at this chart, it's had this big move down. It's at the 200-day moving average. So basically, they're looking at the strikes. You want to match up the strikes with the price. So 21 is here, and then they're selling twice as many calls up here at 26. So if this thing bounces, could have a nice, nice move, at least up to this gap down of 23. Now, granted, they've been coming in a couple times now since this decline to buy some calls. So this time it's a big 1/2 call spread. Also, I already mentioned energy, but this kind of looks like a call stupid that went up today. If you're not familiar with that, it is an actual term where they buy several different strikes in the same security. So XLE, this was marked as a spread, but it looks like they bought both the 72 and the 73 calls here. Again, marked as a spread, both going up over the ask. We saw similar kind of trades going up in XOP as well, and there's also a little bit of OIH calls as well. A couple other smaller cap names, again, which is not really what I'm trying to be very picky, and I know that the market's overbought. We might roll over a little bit. I just don't think it's a great place to add a lot of risk, but not a bad chart for this one. RENN, 1,000 contracts went up. I think I already mentioned PWR, but also pretty decent chart. Not bad, right? Bounce on the 50-day moving average. It's not at 52-week highs, so I don't think there's anything wrong with these. With some of these trades that went up. Again, I'm just being a little bit picky. Lows, we continue to see call buying. Some big blocks have been going up. Some of them look like they've been against stock, but there was one particular trade that looked like it was just outright call buying. UAL, another call buyer. We saw some call buying about a week and a half ago in this airline. Still underneath the 200-day moving average, but real nice bounce today, up 2.3%. You've got a little bit of ways before you get to that resistance of the 200-day moving average at 68.23. Zoetis, another one today. Again, a lot of trades. I just was not compelled to take a ton of risks today, but take a look at all the contracts that traded for Zoetis, and no big prints here. It was a total of 9,000 of the January 72.5 calls. So again, very short dated stuff. If we kind of just look at some of the prints, very small prints going up that got up to that quantity. So pretty interesting. A little bit more pizza. PZZA calls, April 60 calls were bought. A little bit more Intel today, Nike, which reports tomorrow after the close, and a little bit of Sienna. So that kind of rounds out the option activity and today's flows. There's one chart that I really like today that I mentioned as well, besides some of the sectors. But look at international game Technology. This is a name that we've seen big call buying throughout the year, and it's kind of gotten a little quiet. It had a nice move up into earnings, went higher, and it's in digestion mode. I put this chart out on Twitter earlier. I also put it in the trading room. Does it look familiar at all? Have you seen a pattern like this before? Take a look at the IGT, and again, completely different sectors, but still Intel, right? How many times have we talked about Intel kind of doing nothing for a while after earnings, and it just took a little bit of patience, and then all of a sudden this thing just took off. So I'm not saying IGT is going to do that. I don't think we saw any major call buying, but again, a move up after earnings, digestion for about a month, holding support of the 50-day moving average, and then it bounces like crazy. Big winner in the Tribeca trade room. And IGT is kind of doing the same thing. It found the 50-day moving average support. I think a name to no, I don't know if it's going to do what Intel did, but really nice green candle on a move down all the way back to the 50-day moving average. So that's kind of what I'm interested in. Things like this that have good earnings and then they kind of digest for a long time and then they find support right where they need to. All right, so that's today's recap. Have a great night. See you back in the trading room tomorrow.